Hello and welcome to Insurance in Canada. I'm your host, Rick Pineda. Thank you so much for joining me. On today's episode, we look at three articles. The first article looks at rising repair costs causing issues for Manitoba's public insurer to keep auto insurance rates stable. Second article, ICBC CEO talks about how their current no-fault model is here to stay. And our last article looks at dormant constructions projects and the insurance issued regarding those particular projects. So without further ado, here is Insurance in the News. So our first article today talks about Manitoba Public Insurance and their issues when it comes to dealing with rising repair costs, which is not something that's unique to Manitoba. Insurance companies across Canada are experiencing the same issues when it comes to rising repair costs due to technology being implemented in today's vehicles. So let's take a look at how MPI is addressing this situation. If you're not familiar, MPI, Manitoba, Saskatchewan, and British Columbia are the three provinces that have government-run insurance for automobile insurance. So mandatory coverages have to be purchased through their Crown Corporation, ICBC in BC, MPI in Manitoba, SGI in Saskatchewan. Optional coverages can be purchased through the Crown Corporation or through private insurers. So that's the schemes they've adopted. Other provinces go with a private insurance scheme. The only exception is Quebec, who has a bit of a different system when it comes to automobile insurance and injuries you suffer in an automobile accident. So let's look at what's going on in Manitoba. Rising repair costs. Vehicle technology continues to pressure MPI claims. Crown Insurer reports higher per claim costs despite lower overall incurred costs. MPI says the cost of settling vehicle claims continue to rise, driven by increasingly complex repairs, advanced vehicle technology, and persistent global pressures on parts and labor. The public insurer outlined those challenges in its 2024-2025 public review meeting presentation, now posted on Engage MB, where it detailed financial performance, customer service improvements, and how premium dollars are being used. According to MPI, the average cost per claim climbed to $4,289 in 2024 to 25, reflecting a broader shift in the automotive landscape. Modern vehicles increasingly rely on advanced driver assistance systems, sensors, cameras, and specialized materials that make even minor collisions more expensive to repair. And as I said, that's not something that's unique to Manitoba. Insurers in other provinces, and even the private insurance provinces, are experiencing the same issue. Uh, you know, we all love these modern conveniences and technology in today's vehicles, and a lot of technology is there to enhance safety as well. Automatic emergency braking, being able to maintain active cruise control, keeping an automatic distance between you and the car in front of you. These are all modern conveniences and safety features that we all enjoy. However, that does raise the issue that if these vehicles are involved in accidents, to repair these systems would add much more to the claims costs than it would be in a vehicle that didn't have this technology. So it's a bit of I wouldn't say double-edged sword, but I guess the best term I can come up with right now in terms of having the advantages of this technology. On the other hand, the incurred costs when these technologies break down or when they are damaged in an automobile accident, the extra costs that's incurred by the insurance companies in order to repair these vehicles. Back to the article, MPI continues to deal with increasing costs per claim, driven by more expensive vehicle repairs, advanced technology in cars, and the overall rise in physical damage repair costs, says Tara Steele, MPI's media and public relations lead. Those pressures are compounded by external economic forces largely beyond MPI's control. Seal noted that global tariffs on automotive parts arising, along with rising labor and raw material costs, continue to push claim and operational expenses even higher, even as general inflation eases. And yeah, that's another factor when it comes to claims costs, is the cost of parts. We don't produce, Canada does produce some auto parts, We don't produce auto parts for every vehicle that's out there on Canadian roads. Therefore, sometimes it's going to be required that we have to import these parts in order to effect repairs to a vehicle. If there's tariffs being applied to these parts, those costs get passed on to the insurance company, who pass on those costs to their policyholders in the form of higher premiums. So different factors that's accounting for the increase of claims costs, both on the cost to repair the vehicle side, just due to technology, and of course inflation and tariffs are always going to play a factor when it comes to claims costs as well. In 2024, MPI handled more than 280,000 Autopack claims, averaging 1,121 claims per working day. Of those, more than 267,000 involved property damage, with a total property damage claims payment reaching $981.7 million before expenses. Injury-related Autopack claims totaled $211.7 million, while payments to Manitoba medical practitioners on behalf of customers reached $23.5 million. MPI estimates it paid out approximately $4.8 million in Autopack claims per working day during the fiscal year. Despite these volumes and cost pressures, MPI reported stable overall results. Premiums revenue totaled $1.61 billion, slightly above its annual target, while incurred claims before reinsurance came in at $1.2 billion, lower than the previous fiscal year. That's something that many other insurance companies are not seeing. So, hats off to MPI for being able to keep their premiums above their costs, at least for now, anyways. The insurer also reported improvements to its minimum capital test, as described as MPI's financial safety cushion. That reserve is designed to help stabilize rates during periods of uncertainty, such as severe weather events or economic shocks, and protect customers from sudden rate increases. MPI said disciplined spending, improved claims management, and the use of recycled parts and subrogation helped offset some of the rising repair costs. The insurer estimates recycled parts saved policyholders $8.7 million in 2024 to 2025, while subrogation efforts generated an additional $21.1 million in direct savings. And if you're not familiar with what subrogation is, if an insurance company pays out a claim on your behalf, or pays out a claim to you, if there's another party that's responsible for the damages that's caused, now the right to sue that third party goes from you to the insurance company. So subrogation efforts indicates that $21.1 million was able to be recovered from third parties who were responsible, other parties who were responsible for the damage to the insurance company's customers' property. So it's not just an automobile insurance. You see that in other forms of insurance, property insurance as well. MPI says customer feedback continues to play a direct role in shaping how the insurer responds to financial and service pressures. The information MPI receives from Engage MB, customer surveys, and other consultation forms data-informed decisions making regarding MPI operations and policies. Several service changes highlighted in the public review meeting presentation were tied directly to public input. Customer demand for more digital options led to the introduction of online claims filing, the Check My Claim tool, and licensed lookup services. So, online claims filing, that's something that's been around for insurance companies, private insurance companies, for quite a few years. So when it comes to adopting new technology, the government-run insurers can be a little slower to adopt it, but then again, having there's the added benefit of drivers in those provinces experiencing more stable auto insurance rates generally than what you see in other provinces. So there's always that debate, public insurance as a private insurance when it comes to automobile insurance, the pros and the cons of each. I know Alberta was taking a serious look at going the public insurance option. I don't think that's going to go anywhere in Alberta just because of the costs associated to actually start that kind of program off would be in the billions of dollars. So I think that's why that particular investigation probably won't go anywhere in Alberta, at least for now. Who knows how things can change in the future. Customer service improvements remain a central focus throughout the year. MPI reported reduced road test wait times, expanded online appointments. Yeah, and the rest doesn't really apply to insurance because MPI is also responsible for road tests as well. So interesting to see, even in increasing claims costs when it comes to automobile insurance claims, how MPI has been able to maintain their stable rates, even though other provinces, insurance companies in other provinces, haven't quite experienced the same results as MPI. So be interesting to see how much longer they're able to keep that up as opposed to other jurisdictions. Our next article, ICBC CEO stands by no-fault model, says it keeps rates stable, provides rebates. The new no-fault model in British Columbia has always been a bone of contention for British Columbians, whether it's really benefiting the average consumer in British Columbia or not. So you're gonna, if you ever meet two British Columbians, I'm quite sure you'll get divided opinions. But it'd be interesting to see what opinions come from the CEO of ICBC and how they justify it. ICBC CEOs say that its no-fault model has kept rates steady for years, keeping rates stable for 7 straight years, and also providing rebates. CEO Jason McDaniel told Global News, 7 years of stable rates and even rebates. Yeah, for you folks in British Columbia, I don't think you should be complaining, because I can guarantee you we here in Ontario have not seen stable rates for even 1 year to the next, never mind 7 straight years. So keep that in mind. You know, the grass may seem greener on the other side when it comes to adopting a fully private insurance scheme, but believe me, the provinces that have private insurance schemes have not figured it out any better than what ICBC has presented. In BC's latest quarterly financial report, ICBC was forecast to contribute $295 million to the province's revenue, but actually contributed $695 million, which is $400 million more than expected. Not sure why automobile insurance premiums are going to the province's revenue stream, but okay, that's how it works in BC, I suppose. Well, there are a lot of factors that go into how your income changes. So how much money you pay, how much people buy policies, how many accidents happens, how many claims or injuries, McDaniel said. And our investment portfolio was a really big piece of this. And as you can imagine, the valuation of investment portfolio can go up or down over the course of the year, which is why it's really not until we approach the end of the year that we have the sense of how our income will land. And that is true. Insurance companies, it's not just premium is the only source of revenue that they rely on to remain profitable. Probably just as important as their investment income. So taking the premium dollars and investing it in different investments that they're allowed to invest in, and the results of those investments, that's as big a factor in terms of being profitable as the premium and claims costs. McDaniel said the year end for ICBC is March 31st. The move to enhanced care is absolutely the reason why we've been able to keep rates flat year over year, he said. When we were in the old system, we were losing money. Gurpinder Curry says she is dealing with ICBC in the aftermath of a collision in July 2023. It's better for them, but not for the victims or the patients, she said, of enhanced care models. So there you go. There's the debate, the divided opinion when it comes to the care model when it comes to BC. How some see it beneficial, some don't. Curry was visiting the Lower Mainland on July 3rd for her son's birthday. She said she had gone outside to see her mother when a white car came from nowhere and hit us very badly. Surveillance footage from her parents' home showed that the white car hitting a black car in the driveway. Curry said she wound up pinned between the black car, which lurched forward, and a table that was in the open garage. I need to be focused on my treatment and not dealing with ICBC, Curry said. But I have to do both. I have to fight for myself as well as to get all the approvals. There have There's been opposition since ICBC switched to the no-fault model, which is meant to provide care and treatment benefits no matter who was responsible for the crash. And the no-fault model, that's pretty much the model that's adopted across Canada. So here in Ontario, if you're injured in an automobile accident, we have no fault as well. So you'd be seeking compensation from your own insurance company. There are situations where you can sue for your injuries in an automobile accident, but generally your first source of compensation will be your auto insurance provider, either through your own policy or possibly through the coverage provided that's available from the other vehicles involved in the accident if you don't have your own policy. So yeah, it's like I said, it's the model that's adopted pretty much across Canada, the no-fault model. The alternative model is the tort model, where you would have to sue the third party, the other party, for the injuries you suffer in an automobile accident. But there's downsides to the tort model as opposed to the no-fault model. There's always debate as to which model is the best when it comes to the average member of the general public. In my opinion, no fault is going to be providing benefits to providing compensation to the injured party right away, as opposed to waiting for this to go through the courts. And it is a no-fault model, so even those who are at fault in the accident can seek compensation for their injuries that they suffered in an automobile accident. And you may think to yourself, well, if they're at fault in the accident, why should they be compensated? Well, if they're unable to earn an income, they have medical bills piling up. If there's no other source of compensation for them, then eventually they might become society's problem in terms of having to go on the welfare system in order to meet their needs, in order to obtain an income. So, like I said, there's that aspect as well that does apply a benefit to society as well, to provide compensation to people who are at fault in their own accidents. The provincial government is gouging ICB for profits while denying seriously injured victims justice from our courts. Steve Cooner, the BC Conservative critic for the Attorney General, said, according to the report, in the 2024-2025 fiscal year, ICBC contributed $1.65 billion to provincial funds. Like I said, I don't know why automobile insurance premiums are going to the provincial government, but that's the system they have there in BC. But you think that could just be used to help keep rates more stable or even decrease them, but that's BC for you. As a result, we end up in a situation where we have essentially thrown the baby out with the bathwater to save a few bucks, Greg Phillips with the BC Trial Lawyers Association said, and usually it will be the lawyers who be the first one to indicate their displeasure with a no-fault system, because with a no-fault system, there's going to be way less court cases going through the courts. So obviously that hurts lawyers' bottom lines. So it's usually the legal industry that's the first ones to oppose a no-fault system or enhancing a no-fault system. The question to always ask when we see these figures being reported about how much money ICBC is now saving or making is who's paying for it. It's you and I, it's the motoring public paying rates, and most importantly, it's the injured people who are no longer entitled to the same level of compensation that they were. Attorney General Nikki Sharma did not respond to multiple requests from Global for an interview. Last year, ICBC earnings were higher than forecast, and eligible drivers received $110 rebates, which doesn't seem a lot, but considering here in Ontario drivers don't receive any rebates from their insurance companies, so I'll take the 110 bucks over zero any day. So that's the situation in British Columbia. But as I said before, the model that's in BC is not really unique to BC. It's a model you see in the other provinces as well. So I think it's an issue of not really understanding your average member of the general public really not understanding the coverages being afforded under their policy. So maybe it's a situation where the ICBC needs to educate the public on what's being provided under policy, and really highlighting what the difference is between that no-fault model and the old tort model that they used to have. But that's my opinion. Let me know if you're from BC. What do you think of the no fault model? Do you support it? Do you really understand it? So let me know in the comments what you folks think. Our last article talks about the situation where construction sites may go dormant or halt because of the current financial situation regarding operations of, or sorry, construction sites of new condo buildings, especially that may go bankrupt, unable to complete the project. What happens to the existing structure in terms of its insurance? Is that dormant building site properly insured as Canada's condominium market grinds to a halt? Neighbors of properties collected by developers are reporting an increasingly common problem: site negligence. Recent data releases from building industry advocacy groups show developers canceling more than a dozen projects totaling several thousand units. When projects become dormant or temporarily halted, issues around security, damage to existing structures, or the presence of squatters add up to problems for developers and property owners, says Peter Kennedy, Aon's managing director and regional commercial risk and national real estate leader. What's more, vacant properties need to be free of debris to discourage dumping. And most importantly, vacant properties, well, at the very, I wouldn't qualify as a vacant property because it hasn't been completed yet, but a construction project that's halted, no longer progressing, that's definitely something that needs to be disclosed to the insurance company, and letting the insurance company decide if they want to stay on risk or not, because failing to disclose that to the insurance company is just asking, or just giving them a reason to deny any claim that could occur, regardless if it's a liability claim or a property claim. So yeah, it's vacant property, sure, but yeah, disclosing to the insurance company what's going on with this project since it's being halted, that's probably the priority when it comes to these construction companies, is keeping their insurer informed. You need to declare the situation with respect to the project to your insurance company. He tells Canadian underwriters they would probably ask plenty of questions about what you're doing, specifically about site security, how you will clean up the site, and how you're protecting the site with hoarding placed around it. Checking on the property or having security is important from a liability perspective for that developer or whoever is sitting on this land. And that's important. Site security is always going to be important, whether the project is dormant or whether the project is active, but probably more so with the project that's dormant, just because it's not being occupied by workers on a regular basis. So it does invite squatters and whatnot to enter into this site, and that can cause issues when it comes to liability as well as possible damage to the existing structure. Owners are obligated to secure vacant sites, says Kennedy. He adds tools like miniature closed-circuit cameras are now inexpensive enough to be used in sufficient numbers to cover a site. That's true, but miniature camera system is not going to prevent people from entering a construction site. It's just going to be able to see who's entering the site, but that may not be enough to dissuade someone from entering an active or inactive construction site. Higher interest rates have dampened demand for new condos since 2022. Elevated interest rates make it less profitable for investors to buy units at pre-built prices and then resell them at a profit once a condo project's complete. Real estate analyst tells Commercial Underwriter. Sources say that this is the case in Toronto's condo market as well as those in Vancouver, Calgary, and other Canadian cities. Another factor reducing demand, says Kennedy, is a shift in buyer preference away from small 600 square foot units and towards larger condos that can accommodate families. Buyers who initially purchased with the intention to flip found no market for those units now because they're too small, says Kennedy. In response, project owners are now rewriting the whole structure of planned condos to expand unit size to meet market demand. For the actual end product building conversions at midpoint in construction are not too complicated from an insurance perspective, even if some changes are made to interior walls, but insurance needs may need to be updated if changes are made to the structural, mechanical, or electrical specifications, or if different amenities are selected. Kennedy says if the builder or owner will need to add coverage for delayed startup in case rental income is lost. Conversions at midpoint in construction are not too complicated. Maybe not. It depends on what the changes are that's being done in the middle of the construction. It may be simple enough. It may result in costs that put the project past profitability, which is why the project just might be abandoned mid-construction. So back to the article, you have 3 600 square foot units versus 2 900 square foot units on the floor section. It's still 1,800 square feet, he says. Instead of 3 bachelors, maybe you now have 2 families. There's a few more people, but not radically any different. Such changes aren't generally a huge problem from an underwriting perspective. True. I mean, if the project is still, progressing, then for the underwriters, that's not the issue. The issue is if the project halts. If there's no progress in construction, that's when the underwriter is going to have issues with the risk and with staying on risk. From the standpoint of a demographic shift or a size shift, the underwriter is going to be happy that it's occupied, he says. I think underwriters want to see a building built and occupied as quickly as possible. What they don't want is something that's sitting there. It gets very tough to insure projects as they get extended, and it's expensive because you're mid-construction or whatever phase you're at. And there's also the issue of a moral hazard. So physical hazards are things that can cause damage to the building, or that can bring about a peril that causes damage to the building. So storing large amounts of flammable liquids on site might cause a fire to occur just because the amount, or a large fire anyways, because the amount of flammable liquids. But the moral hazard goes to the character of the people that you're insuring. And that's the biggest issue when it comes to construction projects that have halted. Is the worry that what's going on with the owners of the project if they're unable to complete the project. Is there going to be a fraudulent claim coming up? That's not as common as on very large projects, but smaller projects, that could be a possibility. So there's that aspect as well. For stalled condo projects, expanding unit size can also help developers sell off the final 20% or 30% of units. It's not like the old days when you get the 60% threshold, and then you had 2 or 3 years during construction to sell out the other 40%. You can't count on that now, says Kennedy. We have a client that's a condominium developer, and they're very good at the construction management side of condos. They basically pivoted to offering services to third-party rental builders because they have capacity and they have the expertise, and there's demand for that where there isn't demand for condos right now. And yeah, there has been a stall when it comes to condo demand, at least in Toronto, and it's the same thing in other cities as well. And will be interesting to see if the stall in demand will ease up anytime in the near future. There's not any indication at this point that it's going to. So, but there's still a lot of projects that are going to be carrying on. A lot of buildings are still being built currently. So it'll be interesting to see how the condo market affects those construction projects. But in the end, regardless if you're the owner of a, multi-million-dollar construction company or you're just a regular homeowner, it's always going to be imperative that you keep your insurance company either directly or through your broker or agent informed of any changes when it comes to the occupancy use of your building, house, anything, whatever it is that's being insured. Always remember to keep your insurance company involved in the situation so you don't jeopardize your coverage in the future. So that is it for me for today. Thank you so much for joining me. Please like and subscribe to the channel. Please follow Insurance in Canada on X/Twitter. And until next time, bye-bye.